Good morning. This is Al Vickery, registered representative at AL Waters Capital in Braintree, Massachusetts. And this is your video morning call for Monday, November 29th, 2010. Futures are up in the U.S. a little bit this morning, although we think that the markets may follow Europe lower. Stocks in Europe started out relatively strong, but have since drifted to the downside. Fact that Ireland is moving closer to a bailout. Some of the details were agreed upon by European officials yesterday. That sparked some positive sentiment in the morning, but already people are kind of focusing on who's next. Most believe Portugal will be at the trough relatively quickly. Much like Ireland, officials in Portugal have said, we don't need it. You can't make us take it. But it becomes apparent that they will probably arrange some sort of a deal in the next couple of weeks in order to avoid contagion. What investors are most concerned with is the fact that Spain, although they've done a pretty good job at reducing their deficit, the concern is that they're not out of the woods yet, and the fact that Spain's economy is one of the larger among European members. You can put together Spain, Ireland, and Portugal, and it still doesn't meet the size of the Spanish economy. So are they too big to fail? Certainly. But the available funds in the emergency package that the European Union has made available to its members probably wouldn't be big enough to solve the problems in Spain, which opens up a whole nother round of possible problems there in Europe. Gold has held up, we would say. It's trading at about 1360. It's down about $4 this morning. But considering the dollar is seeing some strength as a safe haven with everything that's been going on in Europe and, of course, Korea, we think that gold is actually held up rather well. It's kind of facing offsetting factors. The dollar being strong usually means gold will slip in price. But of course it's also another popular safe haven when things are uncertain. So those have kind of weighed each other out, and gold has drifted slightly lower but still looks pretty good for the long haul. Of course, we do have the situation in Korea. The U.S. and South Korea staged some war games, if you will, some maneuvers off the coast, which has tensions escalating even further. A lot of rhetoric being tossed back and forth. China has called for emergency talks, six-party talks, and Japan has essentially said they are not interested. And apparently the U.S. hasn't responded very favorably thus far. We haven't heard much in terms of a response from the U.S. officials. So things are pretty tense in that area. And it does help to illustrate the kind of uneasy relationship between the U.S. and China, because here we're faced with the situation where we are at opposite ends. Our allies are on opposite parts of the table here, and this illustrates some of the long-term views that we have as far as gold and rare earths go. Remember, we've talked about rare earth elements quite a bit lately. Stocks such as Molycorp here in the U.S. and Rare Element Resources in Vancouver, Canada. Thus far, China has a roughly 94% monopoly on the production of rare earths, and these are very important in our technology that we live with every day, and a lot of military applications, which will make them very prominent in our discussions in the coming months and perhaps years. So again, with relationships between the U.S. and China possibly being a little strained by the current Korean situation, it does help to illustrate that we do need to look towards the future for rare earth elements, and making sure that we have a secure supply and the opportunities to do so are very limited. So that's why we like some of the Western stocks and companies that are involved in rare element resources. Looking ahead to the trading day, you can expect maybe volume will pick up. It was a short week last week. We ended on a half day on Friday. The Dow fell about 95 points, which is pretty sharp for a shortened day. A lot of the institutional traders will be back at the plate today, so we'll get a better idea of what sentiment is really like. There is no new economic data coming out today, so investors will basically stay focused on what is happening on the global stage. And we do expect that we'll see a relatively tight trading range for U.S. stocks. The general bias is still a little bit lower. There's just too much uncertainty out there. Gold should hold up, may drift lower. It does look like there's some downside potential in the next week or two, but all things said, the dollar does face a rough ride ahead, and gold is likely to benefit from that. So we'll look for basically a tight range in all areas for now. So happy trading. We're entering the holiday season once again, and enjoy your day. We'll talk to you again soon.